Let me start. Okay, good evening, our superstars. It is Tuesday, December 18th. This is Talk to Me Tuesday, and it's Talk to Me About Taxes Tuesday. And we have on tonight my personal accountant, Stephen Beppel, who is with Beppel and Associates, also known as Avrio Solutions. Okay. And we came to know Stephen through an associate of mine at Commerce Bank that I was doing things with, and she recommended Stephen, and Andy and I we just fell in love with him. We just thought he was amazing, and he has helped us through the years with our taxes. Now, guys, remember, for 3 different tax years, we had sold a house, bought a house, sold a house, bought a house, sold a house, bought a house. My husband has changed jobs with 3 different corporations, and I think I'm the most consistent thing in our relationship. Don't you think, Steve?
And you may well be that. And the thing is, that's really scary, actually.
And I have to tell you, we've had so many people say, "You still use an accountant in New Jersey? You need to talk to so-and-so or talk to so-and-so." And I'm like, let me tell you what. We have a relationship with this man. He is a believer. He is faith-filled. He questions me. He pushes me, and I know if I ever get audited, the government will still owe me money. And he's fair, and he doesn't judge. He knew Andy and I when we were making this much, and now he knows us that we're making a little bit more, and has never treated us any differently. And I'll tell you, the one thing, Steve has actually made me cry before, and I'm going to try to get everybody muted. Make sure y'all mute. Steve actually made me cry. I think it was our first year here. It might have been this past year. We always get on a speakerphone with Steve when we're looking at all of our taxes and everything. And he sends us all this stuff, and he says, "I still need this and this and this." Mainly, it's my stuff. And he said, "Joanna, I just want to commend you." And I'm standing in Andy's office, and we're on the speakerphone, and I'm like, "You can't even see how good I look. How is he going to commend me?" And then I thought, commend, not compliment. Okay. So he said, "I want to commend you." He said, "You have moved and moved and moved with your business, and you can consistently produce every year. And I just want you to know that, I just admire and respect that." And you guys, it's one thing to have your husband say, "Honey, I'm so proud of you for all these moves and all these years." I mean, I've been in Mary Kay now for 27 years. I started when I was 12. But, to have someone who knows your numbers say, "You consistently produce, you consistently do this," and I want to commend you. And so, that being said, I'd like to introduce Stephen Beppel, and he is a very strong Christian man and a wonderful, wonderful accountant, owns a company, just does business the right way. And if you guys, as you're tuning in, if you do have questions or concerns or anything that you want me to address, you need to text me or box me. I have my phone on alert. And so, Steve, the floor is yours, honey.
Okay, thank you. Welcome, everyone. Just to add to that, just so everybody knows, I am a certified public accountant. I've been doing this for probably too long now, but about 30 years. But what I'm going to do is I'm going to reference a form that is provided by Mary Kay for all of the sales consultants. And Mary Kay overall does a really good job in the documents and information that they provide to their sales consultants. And I'm going to go down a list. Hopefully you have this list in front of you. I believe Joanna actually emailed it to all of you. So I'm going to use that as a guide, but I'm also going to
Steve, yes. I'm sorry. I just had to unmute myself real quick. You guys, it was on Facebook, and it's under files on Facebook if you want to close out and go get it.
Okay. So with that, I'm also going to, after we go through this one form, I have a series of questions here. It looks like I have about 5 questions, and I will be happy to answer any of your questions. And one thing that's really important to me as a CPA is that the information that I give you not only is accurate, but that you understand it. because I hate to admit it, but our tax system is really terrible. It's not something that is the average person understands. Even the above average people don't understand it, quite honestly. And, and there's changes this year also, but I'm going to focus on the business end of this. And with this form, one of the places that you always start with, okay, is that you sell. And that product is very important, especially for consultants, because you guys are buying the product from Mary Kay, and Mary Kay breaks it down. You have a 50% markup, and one thing that I find that I'm dealing with other consultants through the years and so forth is all the consultants want to take the deduction at the retail level. That is inaccurate. Okay, it needs to be at the cost basis. So you only get a deduction for what you actually physically paid for the product. But Mary Kay's list here starts off with your inventory that you start off at the beginning of the year. Okay, and oftentimes with that inventory, remember, is valued at cost, which is half of the retail value that you're going to be associated with. With that, as consultants, especially newer ones, you may not exceed certain limits. That does not say to you that you should not file an income tax return. If you're really going to give the Mary Kay consultant activity and really try to make a go of it and make a business out of it, it is not uncommon for the first year or two, maybe even 3, to actually lose money. Okay, and those losses are deductible. You're paying that out of pocket. Okay, the problem comes in with losses for this is when you lose money beyond 3 years, and I'll touch on that when we talk about a question that was asked to me. But one of the things that with your product sales, you sell product, you'll make a profit on that. In general, that's going to be 50%. Okay. You're going to give product away at demonstrations. That cost is what you get to deduct, or 50%. You might give away for prizes. You might use it for advertising purposes, where you take the product and actually give it to somebody who's interested in buying it but wants to try it out. Okay. All of those are legitimate expenditures of the business, but they get deducted at a cost basis, not a retail basis. So with the process, Mary Kay you'll have a sale, and you'll have a cost of sale. You'll end up with a gross profit. There are a couple forms that Mary Kay does provide to you to help with this process. One is not only the income tax sheet, but there's also another sheet that they provide. It's your Mary Kay weekly accomplishment sheet that also provides to you some of this basic information. And if you follow through with the process, it will really help in the preparation of your tax return at the end of the year. I believe this form is online, and if you aren't familiar with it or you haven't taken the time to look at it, I'm sure Joanna will be happy to help you with that. Okay. So in general, when we're talking about from an income standpoint, we're talking about you're going to have sales, then you're going to have commission. I love the hat. Okay, but you're also going to get commissions as you go through the program. One of the things that you're going to experience, you're going to bring in people under you, so therefore you're going to start getting checks from Mary Kay. That is going to be just direct income, commission income to you. Now, both those aspects are reported on a form called Schedule C. It's just a business income tax schedule, okay, for federal tax purposes. Many states will use the similar form, if not the same form, okay? So with that being said, you have your income level, But now where a lot of people really struggle is when we start getting into the expense aspect. Now, Mary Kay gives you a clear representation in this form, in this income tax preparation form, of what the normal expenditures for a consultant would be. And I'm going to just briefly go over some of them, and we'll talk about some of the expenses that require a little bit more thought and work on your part as consultants. You know, office expenses, very normal expenditure, okay? You have business supplies, magazines, publications that you may be buying from Mary Kay because they do provide literature for their products, okay? Laundry, bank charges, advertising, postage, anything that can be directly tied to the business activity is deductible. The law is very specific in how you can handle business expenses. They have to be ordinary and necessary. So if you're legitimately going to Staples and buying office supplies, paper, whatever, you can write that off directly related to the business activity. So you can see at the beginning when you first start out, it's not uncommon for an individual to buy a lot of just stuff, business expenses. And, you know, there is a tax deductibility for that, number one. And number two, you could actually create a tax loss, which would actually provide taxable benefits for, because you'll offset other income with that. One of the more challenging areas that you're going to have, and there are plenty of other expenses on this list, and you take the time, familiarize yourself with them. You know, that's what it's there for. You know, if an organization is giving you good information, take advantage of it, okay? Areas that people really start to struggle with is when you get into automobile use, telephone use, the terrible word called home office deduction, and so forth. Even computer use. Okay, you're say you have a personal computer at home, and you're using it for business. Well, okay, there may be some deductibility related to that. One of the things you have to realize is that, you know, if you're utilizing, let's take, for instance, your telephone, your cell phone in particular. So like your cell phone, if you're utilizing that for business, then it's deductible, right? Yeah, maybe. Okay. Because now what you have with the phone is, do you not use it for personal use too? Most people do. Okay. So that doesn't limit you in deducting, you know, a portion of the telephone expense. Okay. You just have to come up with what percentage of that is business versus personal. So you really need to be aware of those type of expenditures, because under the unlikely possibility of you getting audited, you are going to have to provide documentation for that. Okay, so areas that you might have, or expenses that you might have some personal use, will be telephone expense, computer expense. Now, computer expense also could mean home internet service. Okay, that is something that is there that you're paying for. You're utilizing that not only take orders, but communicate with Mary Kay. I'm sure nobody does emailing anymore because there's Twitter, which I don't do. I'm too old for that. Okay, but there, you know, I guess I'm an old guy, so it's Facebook. Okay, some of the millennials, you know, Facebook is passe, so we won't even get into that. But you know, it's something where, you know, there you will use those type of expenses or services. So therefore, they are business related. And again, what happens is you end up getting a pro rata portion of those expenditures. Let's talk about automobile expense, because I'm sure nobody uses their auto, but it's something that's really important. One of the easiest things to deal with auto, okay, is you have to track your miles no matter what. So you need to keep a log. The law requires you to keep a written log. And at one time, they used to require it to be contemporaneous, which means daily. Okay, that law got relaxed many years ago. Yeah, I see Joanna gave me that look. Don't like that one. But the IRS does allow you to go back and reconstruct that auto log. But I would highly recommend that you do keep track of your auto. There are a ton of apps out there that do that, okay, that you can actually, it's amazing. I don't personally use one, okay, but at the same time, I know clients that have provided apps for me and said, here's my business miles, and it's very well detailed. So once you establish and keep track of your mileage for the year, you have to break it down into two categories, the mileage. One is the business use of miles, and then the second one is going to be personal. Now, once you have established that, that's really most of the hard work that you're going to do, okay? The next step with that is you have two options when we're talking about automobile expense. One requires a little bit more work than the other. You can use the actual mileage versus the actual expenses. So say, for example, you use your business vehicle 60% of the time. That's what your percentage comes out to be. And now what you do is you go through your actual expenses, gas, insurance, repairs and maintenance, licenses, all of that, the cost of the vehicle. So all of those costs, and now the cost of the vehicle is related to depreciation, and I'm not going to get into that. If there's interest in there on the vehicle because you're buying it, it could be a lease payment, okay? What you would do is, say that totaled up to $10,000 for the year, and you've determined you've used that car all year, January through December, and you've determined that it is 60% business use. So now what you have is you can deduct 60% of the auto costs there. That is the more involved transaction. There's another thing that the IRS allows you to do, and it's very accurate, okay, surprisingly. The IRS doesn't do too many things well, but that is something that they actually do well. You can take your actual business miles and times that by what's called a standard mileage rate. For 2018, it is 54.5 cents a mile. So what you would do is, say your total miles for the year that are business related only, the personal goes out the window, okay? Say there was 10,000, and I'm doing it because of easy math, 10,000 business miles at 54.5 cents a mile. So you now get to deduct $5,450, okay? So again, that's an easier method to do because the IRS says, here's a rate, you don't have to do anything, you have your miles. On the actual side, you have you have to keep track of your repair costs, gas, everything else. So it's really important to keep good records whenever you're doing this. And again, and I'll probably harp on it quite a bit, there are documents that, Mary Kay provides you to help in that process. And just so you know, I do not work for Mary Kay, okay? But when I do see a good document that makes sense to me, that's easy to understand, I'm going to tell you to use it, okay? Why not? Okay, I don't believe in reinventing the wheel over and over again. Let's take advantage of it. And on one of these sheets, they have there's a monthly record. here, and again, I know Joanna has sent this out to you, but it lists for your vehicle costs. It goes gas, oil charges, car repairs, interest, license, insurance, car washes. And so it helps in really letting you guys know what's available, what should be included in that number. And I think that's really important when you talk about, okay, a lot of people don't know, oh, I can put car washes in there. Yeah. I mean, it's allowed, it's legitimate. You take you take your business use of it. It's all good. So that is an area that it will probably be one of your larger expenditures that you're going to have. Okay. One of the last things that I want to touch on related to expenses is the home office expense. There are plenty of accountants out there, and there's two thought processes here. Some accountants will say that it's a flat out audit area, that it increases your risk. Other accountants, probably more in lines with me, is, hey, if you use it legitimately, then I will be the first one to tell you to take the deduction. Okay. I think it's really important. But you do have to get over a few hurdles with the home office deduction. So let's talk about what's included in the home office deduction first. So you have all of your utility costs. You have homeowners insurance. It could be mortgage interest, real estate taxes, repairs and maintenance on the property. Okay. So all of the expenses related to the house or apartment, if it's so be, it could be rent and so forth. That is what is going to encompass all of those expenditures. Now, what happens here is really, really important. For you to qualify for home office expense, that room or area needs to be exclusively used for business. So, ladies, that means that if you use your dining room table or your kitchen table and you use it for Mary Kay, that's great. And that's, really awesome. But if you also eat dinner there, sorry, government says can't do it. Not allowed to do it. Okay. So keep that in mind. But now on the flip side, it's not uncommon for you to have a bedroom, okay, that you use specifically for Mary Kay, or other parts of the house that are, and you'll keep on hearing me say specifically used for the business activity. It is really, really important that that is one of the things that they will actually evaluate, make sure under an audit, they will ask you all kinds of questions related to that, because they really want to make sure that you're using it exclusively for the business use. But now here's what happens is, say you determine that you use 5% of your house, and it's all based on square footage. So if you use a room 12 by 12 and the square footage of your house is, 2,400 square feet, then, you're going to have approximately a 5% business use with that. So that means that all of those expenditures that I said earlier are 5% of them are now tax deductible. Now, if you have a mortgage, keep in mind under the new tax law, and they've raised the limits, you may not be able to itemize this year because a married couple has to exceed $24,000 under the new tax law. So therefore, if your itemized deductions, which in general include taxes, mortgage interest, charitable contributions, medical expenses are there too, but it's really hard to get there. And taxes are capped out at $10,000. Wherever you're living, Georgia has a relatively low income tax rate. I live in New Jersey. I think we're probably the third highest tax state in the union. So we'll hit the 10th. I mean, my real estate taxes are close to that in itself, besides the income taxes. So, but keep in mind that now where you may not be able to get any of those deductions because the government's giving you the $24,000, then now under the home office, you might be able to get some of those deductions that you were going to lose. So again, it's something that may have an impact on you. Everybody's situation's different, but those are available. So I'm going to kind of end it here because I don't want to get too long from the standpoint of what your tax deductions are. But on or from Mary Kay, they give you a much more extensive list as to what is deductible. One thing that I know certain people like to go to their conferences, like to go to the Mary Kay conferences. Can't imagine that I know anybody that goes there, but that is deductible. Okay, yes, I am picking on. Tax preparation fees are deductible. Professional fees in general are deductible. So like I said, there is an extensive list that Mary Kay provides to you. That may not be an all-inclusive list. What I often tell clients is this, that if you utilize it or if you have that expense in the business, even though it may not fall under this list, if it's ordinary and necessary for the business operation, then it's deductible. Okay, that's what the rule specifically states. Okay, so I'm going to temporarily stop there because I know I have questions to answer. But did anybody have any questions related to things that I may have just said?
Okay. Well, first off, you guys, I want to let you know, when Steve talked about the weekly accomplishment sheet, that is on InTouch. The other two forms are on our Facebook page. Those have been compiled by people who work with Mary Kay, but it's not directly from the company. So I just want to clarify that. Steve, I'm already getting questions about, and I think I can answer this. If someone doesn't own their home, can they still deduct a portion of their apartment, condo, whatever that they're renting if they use it exclusively for their business?
Yes, they can.
Okay.
There's no difference between you owning your home or renting it. So
Okay.
you'd still have to use the square footage.
Right.
But yeah, it's 100%. It would be deductible at that point.
Okay. And then if someone didn't have a home computer,
Mm-hmm.
like a lot of people who have computers at work, they don't have a home computer. If they go out and buy one, how much of that can they deduct?
That's a great question, and it is deductible. But here's the hard part with that question is only the portion that is used for business. But okay, who's going to make that determination? You are. Okay, so that's why I say it's a hard question. It's a great question, it needs to be asked, but at the same time, you could be really aggressive and say, well, I use it 100% for business, then it's 100% deductible. Okay. Or maybe a more conservative way is because well, I only use it for about half the time for business, so I'm only going to deduct it half the time or half the cost.
Okay.
The one thing about it is you got to remember, I'm a common sense type of guy. Okay, I like to be. It's got to make sense to me. Okay, so if you tell me you go out and buy a computer, and I know that you do a bunch of other things like we all do, okay, and you say it's 100% for business, I'll look at you and I'll say fine. But you do realize that an auditor is going to look at you and say, oh, you don't do anything personal on that. You don't have a personal budget on that. And, so really, maybe a business percentage is a better way of approaching it to reduce your risk factor of being audited. Okay.
Okay. Okay.
So, but
And
yes,
then,
it is deductible.
and
Correct.
then Amy had asked, she's got her cell phone and her home line. And I know we've got people in very rural parts of America. They still have dial-up internet,
Okay. Wow.
things like that. So you're again saying a percentage of that.
Yes, if you're really utilizing a portion of both your business and home phone, I should say, if you're using a portion of your cell phone and your home phone,
Mhm.
I would try to get a reasonable basis for establishing, okay, do I use my cell phone most of the time, maybe 50% of the time for that, and I use the house phone 20% of the time? I would take a prorated portion of each then.
Okay.
Okay.
And
No,
then I know that as far as the Mary Kay uniform goes, the red jacket, the beauty coat, the director's suit, all that is a uniform. But let's say I have a consultant who has two outfits and that she only wears it for Mary Kay and she has to have them dry cleaned or whatever. That, of course, that's a business expense.
in general, it can be the dry cleaning, yes, especially after it's being used. It's a slippery slope on this one, okay? Because again, the regulations state that if it can be used for other purposes,
Okay.
then in general they would say it's not. But now on the flip side, I'll give you an example that might help. I have a lot of construction companies, and you know, the workforce in the construction companies wear jeans, and these guys are, you know, and girls are ripping jeans left and right and so forth. And at one time you could deduct them as work clothes. Now under the new tax law, that is not going to be available to you. Okay. So it is something, because employee business expenses have gone out the window, but as a business owner, the deduction is still there. And my argument would be is, hey, listen, if you're really utilizing it and that's your uniform, especially if it's Mary Kay colors and everything else, I take the position that I would rather argue the deduction if need be.
Okay. And
So,
then another thing is we have, and you've dealt with this with me for 20 years.
mhm.
I have demonstration product, which, you know, I have my compacts and all that are filled, they're demos.
Yep.
That's a write-off at wholesale cost. What about our personal use? Because we don't make money on that.
Mhm.
So how do we account for personal use?
Normally, and I believe one of the Mary Kay forms has the personal use comes out of your purchases. Okay. It's not deductible. It just comes out of your cost that has been accounted for in your cost of goods sold. I have not talked about some more complicated issues like cost of goods sold so much. I'm going to let that more into the tax professional. You're going to give them information and they'll be able to show you how each of it works for you. But for personal use would come out of your purchases wholesale at your cost basis. And that just gets, you just take it out of there. It's not deductible or anything like that.
But it's also not a gain. It's not a profit.
That is correct. It's not a gain also. It's not
It's just a
income.
wash.
It's just you. It's kind of like you going out to the store and buying the product. That's all it is. Okay.
Okay. Paula, why don't you ask that question? Because I don't know how to phrase that.
The question about the personal use product versus the cost of the products used for demo purposes.
Yeah. The
Okay.
deductible. Mm-hmm.
My understanding is that this next year, it might benefit us to perhaps use our demo products after they've been used a little bit. We could then use them for personal use, and then what we use would be part of the tax deduction for us.
Okay. I mean, I can see that there's a possibility with that. I would imagine this, Paula, when you say that, with your demo products, how I might look at that is this, that if you're going to put them out in a demonstration, a new demonstration each and every time, I would tend to doubt that many women would want to just go into an already used demo product and start taking it out again, because who knows how many fingers have been in there. And it's just a personal thing. Okay. So, in general, I mean, I don't disagree with that question in the sense that if you would normally take that product, you cannot resell it, and you would probably end up throwing it away. And if you wanted to use it, yeah, I mean, I don't see a problem with that. I would still write it off as a demo product.
Okay, thank you.
Well, and you know what, ladies, a lot of times we have limited edition products. I have a lipstick right here. It's limited edition. We cannot order samples of it. We can't. And so mine right here has been the sample, and I scrape off of it. But, if I want to use it, it's mine. But it's been written off as demo. Okay, Steve, can you address really quickly, because we've got women going to career conference in the spring, and then, of course, seminar in Dallas this summer. How much of their travel expenses and food and hotel and all that is a business expense?
Okay, so here's how the conferences work. So if you're going to a conference, and I'm going to say it's just the individual consultant, okay, the travel to and from would be 100% deductible. And that includes Uber, if you use Uber, Lyft, and all that other stuff. The room cost during the conference is 100% deductible. The cost of the conference is deductible. The cost of the food is deductible, but only 50% because it's meals and entertainment. Okay. What is a benefit that often occurs with this is that if you were to bring your spouse, and that person would not, their travel would not be deductible. Their costs during the conference wouldn't be deductible, but they're going to share the room with you and so forth. And if you stay a few days later, the cost of the room is personal, but okay, you're going to travel back. You had to travel back anyhow. You can get some personal benefit for the expenses that you incurred during that conference. At the same time, you'll get some tax deduction for it. So when you look at it, all of your costs related to the conference during the conference time and so forth, in general, is 100% deductible, including your airfare. If you did it by airfare, if you drove, that would be the same thing. So any travel to from, meals are deductible. Like I said, only half of your meals. One thing I do want to say, since I touched on meals on a little side note, under the new tax law, please be aware that business meals are still deductible 50%. Entertainment is not. Entertainment is no longer deductible for business purposes. So if you happen to be taking somebody golfing, I know that Joanna would do that all of the time because she's an avid golfer. Or if you want to take somebody to a show or something, okay, those costs are no longer deductible. Okay, so just keep in mind that any entertainment is no longer deductible. The meals potentially could be. Sorry, Joanna. If it was a group of guys, I could use the strip club, tell them that they couldn't go to the strip club anymore.
Oh my gosh. Okay. Let's stop right there. Let's stop right there. Okay. After I say you're a faith-filled man.
Exactly. Well, it's
Well, and
I have unsaved clients too, and I get to hear a lot. So
I know. So I asked earlier if anybody had any questions. I think you covered a lot in 40 minutes.
Mhm.
But I like your phrase ordinary and necessary. So it's not out of the ordinary and it's something you have to have. So like a lot of our people don't have access to, like in my office, I have a computer, I have a copier, I have fax, I have this, I have that. So when they go to Staples or Office Max or something like that and they have to pay for those things, they just save those receipts. And then what I tell them to do is just add it up each month.
And I would agree. I mean, listen, good records are, really, really important. The one thing that I talk to clients often about is keeping good, solid records, because you know what? I even tell clients to use credit cards because we live in just a credit-driven world, and at least you have documentation of the expense. You pay cash for stuff. If you're like me, I'll lose the receipt. Okay. So it's kind of like I put everything on credit cards so I don't lose the receipt. I don't want to lose the deduction.
Right.
Listen, I feel that all taxpayers should work towards paying the least amount of tax legally allowed by law.
I love that. I love that.
Okay.
How
Because
many
my government
years?
doesn't.
How is it still 7 years we should hang on to our receipts?
In general, yes. I mean, so the normal audit period for IRS audits, to say, it's normally within 3 years. If there's a negligence part, they will extend it up to 5. If they go a little bit beyond the negligence aspect, it could get up to 7 years. If you flat out commit tax fraud, it's indefinite. Okay, not to say I can't imagine any of you ladies doing that. Okay, but I'm just that's the rules to the game.
Okay. And then Steve, just in case they want to know, if you were to prepare a single woman's taxes who has an income, let me take Jules as an example.
Mm-hmm.
She's a school teacher and she has her Mary Kay business. What are the typical fees they would pay to have that professionally done?
It depends on the part of the country. Okay, it really does. And it depends on what type of tax preparer you use. You can go to a tax preparer that has has some education maybe and so forth, and you can spend a few $100s. Okay, you can go to H&R Block and spend $400 or $500. Okay, which I'm not a big advocate of H&R Block, but I'm just saying H&R Block is expensive. Okay, they actually nickel and dime you to death. If you go to a CPA, you can spend anywhere between $5,000 plus. Okay, so depending on what part of the country you're at, there are some very good tax preparers out there that, hey, you know what, they might be CPAs. They work for somebody else and they do it on the side. They might only charge you a couple $100 to do the tax return. So really it goes across the board. If you're out in California, it's going to be expensive. If you're in the Northeast, it's going to be expensive. Arizona, I'm not sure to say because I don't know anybody.
I don't know. We use you.
So, but depending on where it is will determine, your cost factor and the complicated aspect of it too. If you give the tax preparer information in a very clear, concise manner, and there's not a lot of complexity to it, that's going to make their job easier. That does not mean you, Joanna. Okay, so
hey, I give you great documents every
year. You do, but now you lost one aspect of it, complexity. So those are all factors that are going to go into preparing your the tax return. Talk to people, talk to friends. Okay. There are a lot of people out there that are preparing tax returns that shouldn't be. Okay.
Well,
And
and we've had experiences, Steve, with consultants and even directors who have
Mhm.
said, I went to this person and they said I couldn't do this, this, this. And I'm
Yeah.
like, they have no experience with direct sales. So I will be posting, you guys, and those listening to the recording, I will be posting Steve's information. He's done our taxes in Georgia, New Jersey, Carolinas, and now in Arizona. So if you want to chat with him or even just shoot him a message
Yep.
and say, what can you give me an estimate?
Yeah.
I'm sure he would help you out.
And if you have a question, I mean, like, there's one question I do want to touch upon before we finish up here.
Okay.
Because somebody asked a specific question about their accountant telling them that the losses are not deductible.
That's good.
One thing that all of you need to be aware of, that the IRS has loss rules, and they call them the hobby loss rules, is what you'll hear oftentimes quoted. Now, a hobby loss is a loss in a Schedule C in general, although it can go across many different entities, but is a loss that occurs 3 out of 5 years. The government basically says that, hey, listen, if you haven't demonstrated a profit motive of making money, for more than, the 3 out of the 5 years, then you know what? It's really not a business. Okay. So, and I have people that, yeah, we've done that and so forth. So what happens is this: please remember that you're getting a 1099 from to Mary Kay. Mary Kay is sending you a 1099, which is reporting income and purchases to the federal government. This one person says here that they didn't, it appears to me that they were not going to be able to, file a Schedule C, but yet they were making a few $1,000s, okay? But they were generating losses on their return. So what that really means is you still have to file the Schedule C because the government's been reported that you've received money. But now what happens is the government says, hey, you know what? We're not going to allow you to deduct any losses. So if you made $3,000, we're going to allow you to deduct $3,000 in expenses and have a zero income or loss. So it is still very important that you file the tax return, because if not, you will get a letter. The government is very good at cross-referencing 1099s, and I can assure you that Mary Kay sends them into the government. So please keep in mind that you still need to file the Schedule C. You may not be able to have any deductible losses, but it doesn't mean that you'll pay tax on that income either. So I don't want you to be confused by that aspect. Because I'm sure people, based on this question, said that,
don't even file, and you should.
Yeah, basically, you should.
It really just comes out as a wash.
It does.
So ladies, the main thing I would love to encourage you guys to do is on December 30th, 31st, the 1st, count your inventory. I get myself a little teenager. I come in here. I say, this is how many I have of each thing. She's counting it. Of course, I carry a lot more inventory than a lot of y'all. But count your inventory and come up with a number. And you take what you started with at the beginning of the year. You take what you end up with. You do the math. And that's what you either sold, gave away, used for yourself, and all those numbers should match up. And the weekly accomplishment sheets, you guys, if you will fill those out once a week or once a month, you will never have to worry where you stand.
Yep. Agreed. It's a great it's a great sheet. It's very, very helpful in the whole process.
Yeah.
Don't wait until last minute. Don't walk into an accountant's office on April 10th and ask them to file a tax return. Okay, so please be mindful. Earlier is always better with an accountant.
Yeah, and find someone. If you don't use someone like Steve, find someone who has experience with direct sales. We're not an MLM. We're direct sales. It's a little bit different. So,
Cool.
Well, Steve, thank you so much. You guys, snaps to Steve. Come on, everybody. Yay. And when I post this video, I'll have his website as well. You know, feel free to contact his office. He only charges $300 a minute. And now he has done this for us out of the kindness of his heart, and we really appreciate you, Steve, so much. And I personally appreciate you because you love me.
I do love you. I do. Now, don't tell Andy that because, well, he might say, "Please take her." I'm like,
he just got home from work, so
Oh,
thank you, thank you, thank you. And you guys, make sure you look on Facebook for those documents. Make sure you're filling out your weekly accomplishments. Don't do like I used to do before computers, and I used to sit on my bed and on the last day of the year and start adding up receipts. You've got the tools, use them.
Yes,
so
absolutely.
again, thank you, Steve. God bless and Merry Christmas.
Merry Christmas to you guys too.
Thank you. All right, y'all. Okay, I'm gonna now, Steve. Before you go, we do something kind of fun at the end. I'm gonna unmute everybody. So on 3, in our deepest Southern accents, we're all gonna say bye, y'all. So 1, 2, 3.
Bye, y'all.